Hello guys, hope you're doing fine. Happy New Year. Happy New Year to all of you. Welcome to the New Year 2025. So I know all of you are resting right now and chilling, having those holiday moments and months, having a good time. But I would like to start this year with a brief explanation about SMC strategy of trading. And I'm going to use the diagram. Okay, I'm going to use the diagram to illustrate how we find the entries and how we find the take profit and the stop loss on the SMC strategy. This strategy applies for all currencies, even indices, commodities, depends on what you're trading. So in SMC we have a ranging market that creates higher high, higher low, higher high, higher low, higher high, higher low. Okay, so in this market we're only looking for buys since it is a bullish market, right? Because how you look for sells on a bullish market, that's how you risk your money. You can be liquidated and you end up losing what? Your money. So SMC, we also have a ranging market. A ranging market does not create higher highs, higher low. It only creates, it's always ranging. Okay, it's always ranging. It's not bullish, it's not bearish. Okay, and we also have a bearish market creating lower low, lower high, lower low, lower high, lower low, lower high. Okay, so in this market we should avoid this one first. Then in this market, always look for sells, never look for buys in this market. So leaving alone this, I hope now you know the three types of market structure in trading. We have the bullish market, a ranging market, and a bearish market. Okay, so let me first delete this. So in SMC there is more to learn in SMC. So for us to find entries in SMC in a bullish market, let me first create this. Okay. Okay, so so this is realistically how the market moves, because the market never moves straight in a straight line like I had illustrated earlier. Market creates such pullbacks. So if you're able to recognize these pullbacks, you're good to go with SMC. Okay, so in the market structure, we're using SMC strategy. We have first we have to learn that we have to see the market structure, how to map the market structure. Always make sure you have a break of structure in a bullish market. After getting this break of structure, right, let's mark it break of structure, right? What else? What is step number 2? This shows we are in a bullish market, right? And normally it is so confident if you have two break of structures, that is, you're so confident you're in a bullish market. But let me illustrate using the first one. So for us to know we are in a bullish market, price keeps on creating break of structures in uptrend. Okay, so after market creating a break of structure, we always wait for market. Let's mark this. After market breaking structure, breaking this previous high, this becomes a lower low. This becomes a confirmed lower low. Okay, so for us to find entry, price always comes back to take out the first pullback. This full pullback is normally liquidity, or what we call inducement in SMC. Okay, this liquidity, these are people who came in the market earlier, so price has to come liquidate them, take their profits or their money. So in SMC, This is where we come in. We always trade after liquidity has been taken out. Never trade when liquidity has not been taken out. So after market taking out our first pullback, which acts as inducement or liquidity, this becomes a valid high. So anytime this becomes a valid high, this is where we set our take profit, since it is a valid high. So our entry after price taking out inducement, we are looking for an order block in this zone. Okay, we are looking for an order block in this zone. Okay, so we expect price to come, take out inducement, then mitigate our order block, then shoot up. Okay, after shooting, during this shooting up, this is how we set our take profit. This becomes our entry. Okay, this is our entry point. Our stop loss should be slightly below the previous swing low. Okay, so our take profit should be on the immediate swing high. Okay, do you understand what I'm saying? This is how we find entries in SMC. Okay, using SMC, a break of structure, first pullback, price taking it out, sweeping liquidity. We look for another block on the left. Then after mitigation of the order block, price has to move targeting this high, previous high. Okay, so after price breaking this high, as I told you, if price breaks this high, let me first mark this high. After price breaking this high, this becomes a valid higher low. Okay, this becomes a valid higher low. So we mark this after price breaking this previous low, we mark it as break of structure. Okay, we mark this as break of structure. This is a simple way of how to mark our market movement using market structure. All you need is one, break of structure, two, price taking out inducement to make this a valid high, price after taking out inducement mitigating an order block on the left. This order block should have a fair value gap, or what we call in imbalance, as ICT traders say. Okay, so this applies to the market also being in a bearish market. Okay, so same thing applies in a bearish market. So when price breaks the previous low, this becomes break of structure. So the first pullback in the bearish market, this is always the inducement where liquidity is lying. So price has to come take out this liquidity, look for the order block with a fair value gap, mitigate it, and then shoot down, targeting this previous swing low. That's the profit. This is the easiest way to understand SMC. Okay, this is the easiest way to understand SMC. This is both in the bullish and the bearish market. In the ranging market, I don't recommend you people to trade the ranging market, because price is not showing what direction it's going. So obviously either you'll be liquidated, or maybe if you're lucky enough, but it's not good to risk your money basing on hope. Okay, and chances. Always know what you're doing. Don't just trade because you want to trade. Okay, so I'll show you an example using a live chart, live market. Okay, so today, as you can see, price has been dropping. Price has been dropping, creating a lower low, lower high, lower low, lower high, lower low, lower high, lower low. So what happened? Price came, broke this low, last low, and this became market structure shift. Okay, change of character, as they call it. Okay, so what does that mean? We are now in a bullish market. Okay, we have left the bearish market, now we are heading to the bullish market. So after breaking this previous low, this becomes a valid low. So we expect price to come take out our first pullback. As you can see, price came, created this pullback, again came and broke this previous high, making this a valid pullback, which acted as the inducement. Okay guys, this is an inducement, right? So after price taking out this inducement, this is liquidity. Price has to look for an order block. This is where we see our order block with a fair value gap. With all this fair value gap, price has to fill it up before going up. So this could have been our entry, this could have been our entry, Okay, our stop loss just below the previous low, then targeting this previous swing high. Okay, so as you can see, sorry about that, as you can see, price moved very well gradually, looking for our take profit until we hit take profit in that same day, 31st yesterday. Okay, so right now right now price, after price taking out this high, this becomes, and creating break of structure, this becomes a valid low. Okay, so that's why I marked it. So what else? As I told you again, we are looking for a previous pullback which acts as inducement, and as you can see, when price came, price created this first pullback, as you can see, and broke it. So price did not come out to take out this, price instead created another pullback, and this became our inducement. Since there's no any other pullback here, this becomes our inducement. Okay, this is where liquidity is lying. So when price came, obviously price came, had to take out our inducement, and you can see there's no any order block here with the fair value gap. Our good fair value gap is right here, is lying down below here. So this becomes our order block around here. Okay, as you can see. So we expect price to gradually play around this area until our order block then shoot up. As you can see, after price taking out our inducement here, this became a valid low, valid high. So this is our entry, and we are targeting this high, okay, as our take profit. Okay guys, so it's that simple. This is SMC strategy. So our take profit, I expect price to come, we are now in deep profits, I expect price to come until this high, break of structure, until breaking it with, if it breaks above with the body, we expect price to look for another inducement up. Okay, this was my setup, before profits, as you can see. So now it hit our entry. Now so far we are around here in our entry. Okay, so we are in good profits at the moment, and we are waiting for price to come until up here. Okay, or else guys, if you like this video and you've liked what you've seen and I've explained, or you've learned something, for you to get another video, to get a notification next time I post another video briefly talking about the same issue, please subscribe down and hit the notification bell so that next time you'll be notified when I post another video teaching you SMC strategy and how to find entries. Yeah, happy new year once again. I love you guys. Thank you for subscribing. I know I'll reach on the 100 subscribers very soon, inshallah. So guys, I wish you a good year 2025 with a lot of people's money and everything. I love you. It's your boy Easy. Don't forget to subscribe down below. Okay, just give 1 minute to subscribe. I love you guys. As you can see, we are now in deep profits. So far, market has moved. We are on 68 to 70 pips. Okay, so I love you guys. Peace. Subscribe. Bye bye.